Hey, good evening, everyone, and welcome to another space, money space, we call it, with me, Kalu Aja. We're on here every weekend, Sunday, 7 p.m. West African time. And of course, we're talking money, the economy, and finance. We want to make it personal to you so you can become a better investor, retire easier with all that passive income, right? That's what we do here is Sunday. So this week we are talking goal-based investing, and we're going to talk around using mutual funds and of course trading apps. How can we merge those two? How can we use mutual funds and trading apps to get a better investment income or a better investment output? That's what we want to talk about this week. Special thanks to our partners that are sponsoring this space. If you guys notice, it's Financial Literacy Week. So all this month will be Financial Literacy Month. All this month will be talking around the concept of money, investing, basically emergency funds, all those personal finance stuff. We'll be talking around it all through this month. We'll be doing tweets all through the month. And if you've been following those tweets, I think they've been very, very impactful. This year, we try to make sure that we focus more on the, should we say, the female folk, because when we did our research, we find out that in terms of who invests in Nigeria, right, the female participation is very, very low, very, very low. First of all, overall participation in investing in Nigeria is very, very low. And then when you then factor in the female population of total number of investors, it's extremely low. So we did our twist this year to sort of focus on the female folks. So the language we're using, the text we're using is targeted at them, but the principles are universal. You can grab those principles and you can essentially run with them, right? So just to put that out there. So those tweets are daily. They've been going on from the 1st. They're going to end on the 30th, right? And we'll be focusing again on how to invest and all that. So Bamboo has been just great help. Bamboo has supported us in this journey. So we're going to use them as a reference to show you how you can do this, right? I always tell you guys, when I started to invest, we didn't have anything like Bamboo. There was no online investing. There was no internet. There was no mobile phones. It was essentially, if you wanted to invest, you had to go to a stockbroker, physical office. You had to give them cash. Then they bought shares for you. So now we've improved, Now you can sit at home and you can buy shares, not just Nigerian shares, American stocks. So you can diversify your portfolio using Naira in Nigeria. So there's no excuse, guys. I know things are hard. I know I get all that, but there's no excuse really now. You just have got to invest. You just have got to invest, right? There's just no excuse. If you don't invest today, you're going to pay for it tomorrow because it's all about compounding periods. The younger you are, you have a hack. You have more compounding periods. If you don't invest today, you would invest tomorrow. And when I mean invest tomorrow, you would invest in what you would have done easier today. If you don't build up that passive income today, when you get older, you're going to be in trouble. And there's just nowhere else of putting it. So I'm trying to scare you, but this is the way that you want to approach your life, right? Invest today, be like the ant, invest today so that it's easier for you, of course, tomorrow. All right, so guys, we're just going to do a brief disclaimer, right? Everything we're doing here today is all educational, right? Again, we are on X. We're also on YouTube. I shared the YouTube link. X is hard for me to talk and share at the same time, but YouTube link is just there. You can go and see the visuals. Of course, these are all recorded. So after the space, you can listen to it and you can just play it back at your own pace, frame by frame, and get the learnings right. But we're on YouTube and we're also on X. So if you want to just look at the slides, you would see them all on YouTube. So again, this is all educational, right? What we're doing today is educational. I'm not your financial advisor. I'm not asking you to go buy, sell, or otherwise. Always speak to your advisor before you take any decisions. And of course, past performance is not indicative of future returns. Invest at your own risk. Yeah, just want to put that disclaimer out there. If you don't see me sharing it on Twitter, it's just going to be on YouTube. Just go to YouTube and grab that. Yeah. So let's get straight into it. I just want to make sure I hit those themes that I always hit when I'm talking money with you guys online. This is how you build your financial future. If you're not listening the slides, I'm just going to read through them. I have a 6 point plan. And that 6 point plan is basically what you do in any jurisdiction, whether you're in Nigeria, Canada, China, you have to do this exact six plans, right? Number one, you want to basically have a plan. You want to ask yourself a simple question: why am I investing? Very simple. Why am I investing? If you can't figure out why you're investing, you probably shouldn't be investing. The point is, you have to have a reason. Are you investing for retirement? Are you investing because you want to transfer assets to your kids? Why are you investing? And is it for long term, short term? Are you looking for dividends? Why are you investing? That's the very, very first thing that you want to do in your investment journey. Answer that question: why you are investing. The second thing is, if you have dependents, before you start to invest, if you have dependents, you've got to buy life insurance. Like I tell you, you can't insure your life. What you are doing is that you are ensuring that if your income goes away, your dependents have something to take care of to take themselves, right? So if you have kids, you have a wife, right? You want to essentially plan that should anything happen to you, they at least have at the minimum 5 years of your income at the minimum, right? And how do you do this? You go buy life insurance. So if you earn 1 million, you can buy life insurance for 5 million. If you earn 1 million a year, you can buy minimum 5 million and say, should anything happen to me, my kids or my wife gets this fund, it allows them to sort of take care of themselves whilst you are not there, and it gives them that bridge. And you can get innovative. You can say if you have a house, you can do a sum, insure the value of the house. Anything happens to you, insurance company pays you the value of the house, what you owe. So your dependents can take those funds and pay off the home, so they have a home. You can even go further and say, hey, this money is going to go towards my education of my kids. After my kids educated, give it to my wife or whatever. You can get creative. You can do living trust. You can do testamentary trust and all that. I really don't like wills. I think trusts are more flexible and allow you to do more things even after you are dead. You can do a testamentary trust and allows you to do a lot more with your portfolio even after you have passed away. After you buy your life insurance, guys, you want to then start your emergency fund. What's an emergency fund? You want to do at least 3 to 6 months of your necessary expenses. If your expenses are 1 million, but the necessary expenses are like 100,000, i.e., like food, rent, that's your necessary expenses. You want to have at least 3 to 6 months of that saved in an account, not shares, cash or near cash, just saved so they can get access to it in 24, 48 hours, right? We're not worried about inflation with emergency funds. We're worried about liquidity and access. So have that. Why do you want to have that before you invest? Because you don't want to sell your position to go pay for food. You want to have food, have something you can rush to if you have a big problem. You don't want to sell your investment to buy food. So if you can't do an emergency fund, you shouldn't be investing. If you can do an emergency fund, that's your number three before you invest. Number four, you want to participate in your employer retirement scheme. If you work for your employer, they're going to tell you if you save 1 naira, we'll save 50 kobo. In Nigeria, if you save 8 naira or 8%, they save 10%. You want to do that. Why? Because if you don't do it, you are missing out on that 10%. Or if your employer says we're going to give you 4% match, you are missing out on that 4% match. So grab that. It's a salary increase to you. Do your employer match. Then number five, contribute to your own personal retirement. In America, you have the Roth IRAs. In Nigeria, you have the additional voluntary contribution for your retirement savings account. Do all these five before you start to invest. Don't go and buy shares without having life insurance if you have dependents, or doing your retirement savings account. Don't do I'll do two and I'll do six. No, do one, two, three, four, five, then six. That's how you do it, guys. There's a reason why it's set up that way. You have to do one, two, three, four, five, and six. And I've shared that with you guys on Twitter. YouTube guys are just seeing it like a movie. So they are basically just getting the best, right? Again, investing is how to get wealth is pretty easy. I'm going to share that schematic. I always share this. To get wealth, it's easy. Everyone is going to have this exact same picture, no matter who you are. If you are Dangote or you are Kalu, you are going to have the same diagram in front of you. You are going to earn money. Dangote earns money, I earn money. Dangote spends money, I spend money. The difference between I and Dangote is how much Dangote is saving and how much I'm saving. Dangote earns far more. You might be shocked that I save more than Dangote per percentage. You might be shocked maybe because he has $20 billion, but is investing 25 billion. I might save more than him, but the difference is where I'm investing. He's investing in his own refinery. I'm investing in maybe VTI. But everyone's going to have this exact same picture. You are going to earn, you are going to save, you are going to spend. The difference between you, I, and Dangote is where we are investing. But of course, you can't invest if you don't earn. And if you don't earn, you can spend, but you can't save. So the question really is for you: if you can't be talking about investing if you're not earning. You first of all have got to earn money. It's after you've earned money, you can then spend, and then you can then save, then you can then invest. That investing right is where we normally rush to. But we don't talk about the earning side, we don't talk about the spending side, we don't talk about the saving side. So it's a very simple diagram. Earn, save, spend, invest, leave it alone. Let it compound. Buy a good stock, a good investment, leave it alone. You don't have to trade it. Let it compound on its own. Very simple rule. You don't have to do binary days, or just earn, save, spend, invest, let it compound. That's it, guys. That is it. Literally it, right? So we're just cleaning out what we do just to remind you of these principles. These are universal principles. It doesn't matter where you are. This would apply to you, the six steps, and of course, this is how to get wealthy. So now let's talk really about today. We're talking about we want to mix mutual funds and apps to invest. And like we're using Bamboo as our reference. So why Bamboo? Number one, Bamboo is registered by SEC. So whether you're in the US or Nigeria, you don't want to use any app or any stockbroker that is not SEC registered. The app and the fund have got registered, remember. So Bamboo just has the app, they don't have the fund per se. But if it's not SEC registered, you don't even go there. Does it mean if it's SEC registered to make profit? No. But if it's not SEC registered, don't even go there. So SEC, these guys are SEC registered with Bamboo. And of course, it's on your phone. So Nigerians, with the bulk of our investing and bulk of our online access is done on our phones, right? And guys that are listening, I'm just going to take about 20 minutes to do this. Then you can ask your questions. Yes, just give me 20 minutes. I'll run through my slides. You can ask your questions. Right? Lumide, hi, how you doing? Of course, Lumide is going to speak, so we'll just invite him in there. Yeah. So again, if you're going to do Bamboo, it's on your phone, so it's easier for you guys. You can essentially just track what you're doing on your phone. There's no paperwork, no going to the office. If you're in the diaspora, you want to invest in Nigeria. Okay, do your KYC with these guys, open an account. You can invest, wake up, you have a dollar wallet, go from your dollar wallet to Nigerian stocks. It's simple. Again, if you're in Nigeria, you want to buy Tesla, it's expensive. You don't have $400. You can buy fractional shares of Tesla. So you can buy like small of Tesla, right? Do auto dividend crediting. It's simple, it's speedy. The fees, I think, are commensurate. I highly recommend it because, again, it goes with the flow of today. It's online, it's cheap, it's convenient. So it's something you want to basically use, especially if you are both in Nigeria. Like I said, I think in Nigeria, Ghana, and of course the US. So they give you basically that exposure to invest your money. The whole idea now is diversification. Diversification. Currently, the world today, Nigerian and emerging stocks are doing better than the US stocks. In the past 10 years or so, even in the past 15, 20 years, US stocks have done better than the whole world. Now it has switched. So imagine if you just pursue just one strategy, you would have lost this move in emerging market stocks. But if you are diversified, you are basically on top of things. So these apps give you the ability to diversify where you are investing, what currency you are investing in, because you are now buying a US issued security that would pay you dividends in the US. So diversification is the key thing here when you use this sort of app, because they allow you to then you do Nigerian stocks and to also do foreign stocks, right? Fantastic, guys. Let's keep a move on. This is how Bamboo looks like, and I like this because, like I said, you can do US and Nigeria, which means you can do Nigerian wallet, you can do US wallet. So if I'm in Houston, I can do US stocks, but I have a US wallet, right? I can do dollars in that US wallet. If I'm in Nigeria, I can do US stocks, but I have a Nigerian wallet. Fantastic. You can do treasury bills, Naira savings. You can do foreign, i.e., dollar savings right there on the app. And then if you don't know what to do, you can say, okay, I'm going to give someone to manage my portfolio for me. So I just do a managed portfolio. They have their experts they work with, and those guys will then work through on your portfolio based on your own, what you said you want, right? So again, it's the whole idea. When I started, I said when you had to buy shares, these Nigerian shares, you had to go to a Nigerian in an office. Now it's possible to just sit in Aba and buy US stocks, right? Just from your app. You don't have to go to anyone's office. You can buy, you can sell. You don't have need dollars per se to buy these things. You can have a Naira wallet or a dollar wallet and you can get this done. So let's take a peek at what we can get with this Bamboo app thingy, right? So let's just say I'm doing Nigerian. So I can do Nigerian stocks, I can do treasury bills, I can do Naira savings, right? On the Bamboo app. So let's say I want to save in Naira, right? So basically, this is why I want you to do your emergency fund. Use your emergency fund, right? So this case, I'm saying my emergency fund is going to be £1 million Naira. This means that my expenses is more than 1 million. Remember, your emergency fund is 3 to 6 months of your basic expenses. So if your expenses are going to be 1 million, out of that expense, what is the necessary expense, i.e., like your food, like your rent, right? If you take diabetes, what's your insulin cost? Those necessary things that you must buy. That's what goes to your emergency fund, right? So if it goes to your fund, you want to have 3 months of that fund minimum saved. Why 3 months? Because if anything happens to you, you have 90 days to sort of recover if anything bad happens to you before you get a new job, or maybe you are ill, you can get out. This is a very, very important fund. So if I open up my Naira emergency fund, I name it my emergency fund. With the Bamboo guys, you can do many funds. You can have your emergency fund, you can have your mortgage fund, you can have whatever fund you want, but start with this one. Start with the emergency fund. That takes care of that 2 to 6 months of a necessary expense, right? Choose your tenure. You want to do 90 days, 180 days, 360 days, choose the tenure. You can see Nigeria will still have real yields, because the longer it is, the more you get. The shorter it is, the less you get. 90 days here, I'm seeing 12%. 365 days, I'm seeing about 16%. It's tidy. It's an emergency fund. Like I said, we're not worried about inflation. I don't want to say we're not worried about returns, because what I want here is liquidity, access to the funds when I need it, right? This is tidy enough. We can live with this, right? Again, guys, I'm just giving some slides, but if you want to just follow on YouTube, you can see the slides. But this is essentially what I'm trying to communicate, right? And then, of course, what wallet do you want to use? You can have your Naira wallet, you can have your USD wallet. Basically, I think I saw Flutterwave in here, so, on their app. So open your wallet, fund it, and buy. That's essentially what I'm saying, right? So going back to what we're saying, you have to do your emergency fund first before you start to invest, because you don't want to buy really, really good securities and you are making lots of money with those securities, and then you have to sell because you have to pay maybe a medical bill or your car engine knocked. So if especially in a country like Nigeria, where we don't have a lot of personal credit cards, you want to have this guy set up, i.e., an emergency fund before you do anything. Very, very important, right? Very, very important. Olumide, don't go anywhere. We're going to call you in here to give us your own take. All right. So then let's go on. Now, this is the one I want to recommend to you guys. This is the fixed returns investment. This is what they call their dollar investment with Bamboo. So it's also possible to do dollar savings in Nigeria. If you're in Nigeria, right, you can do dollar savings. I kind of like this for the emergency fund because it's in dollars. So what happens is that even though I don't get a lot of returns, right, I am making what's the word? I am making inflation is not attacking my savings. If I invest in naira right now, 15% is going towards inflation. But if I invest in dollars, right, I'm saying, hey, I'm going to get at least 2% inflation, right? But it's in dollar. I can go from dollar back to naira if I need my money. But if I do my emergency funds in dollars, in a way, it's kind of a hack because then I've diversified. It's not my total investment, it's just 3 to 6 months of my expenses, right? And that's basically what I'm putting there in case something happens to me and I need funds really, really quick. So I like this fixed income investing, this dollar investing, right? I like it for emergency funds. Again, using the app to do that because it allows you to just build up that short-term savings that you then need for emergencies. Again, look at how it's set up here. You can I want to invest $100. I can choose my tenure and look at what rate they are paying me. They are paying me about 22.5%, almost the same as you get in the US. Like if you go to the US, savings accounts don't pay anything. They don't, it's very, very little. Checking accounts don't pay anything, it's very little. You get this 2.5% if you do a what's it called? If you do a certificate of deposit, right? So this is nearly what you get in the US, 2.5% on your dollar. So if I invested $100, I get that amount of money in that tenure. So it's tidy. And if I use this as my emergency fund, I can withdraw this right when I want, and I can essentially sell down, should we say, my dollars, convert to naira, and then use that to meet any expense that I just essentially want to make payable. So remember, guys, emergency fund is liquidity. We want access to it. Returns are good, but it's all about liquidity and having something we can run to. If you're in the States, someone asked me once, can I use my credit card as emergency fund? Kind of, yes. I wouldn't say I would prefer you saved and not build up debt while trying to help yourself. But yes, you could use your credit card as an emergency fund, but I prefer you had your own savings than incurring debt to basically get to pay for something, right? Okay, so sort of I've given you guys the lay of the land, right? Why you're investing, how to invest, the steps you want to take, how you want to save, earn, and then to do your compounding. Let's now talk about why we're talking mutual funds. Why not individual funds? I made this clarification with you guys. We've had this space about 2 or 3 weeks ago. If you have a lot of money, what's a lot of money? Maybe you have 50 million, 25 million. Yes, you can go to a broker and say, hey, broker, I want to buy, this is Nigeria now. I want to buy NGX 30, the 30 stocks in Nigerian Stock Exchange. Buy them for me, put them in my portfolio, and have one of your people manage it for me. Fine, you have the funds. So they would give you an account officer, they would manage it for you. It makes sense. But if you have a million, you're just starting work, you have 100K, you want to start to invest, should you wait? No, of course you shouldn't wait. If you don't want to wait, simply buy the ETF or the mutual fund in Nigeria that buys that same top 30 stocks or buys the whole market. Nigeria, we have, for instance, the IBTC equity fund. It buys all the stocks, right? But it's basically one of the oldest mutual funds we have in Nigeria is equity based. You can buy that, right? Or if you have a lot of money, you can go buy the individual stocks. I've given you if you look at the slide I'm sharing, the side by side comparison. If you had to buy the individual stocks, or if you had to go buy the ETF by yourself. Now, if you look at what it's telling you, is that look at the cost. If you are buying the individual stocks, you are doing 30 trades. I'm assuming you want to buy the NGX 30. You're going to do those 30 individual trades, right? It will cost you about from 4,500 to about 7,000. Ongoing cost will be zero because you've bought it, you managing it yourself, right? But again, you have to then go back in, track your dividends, track your this, track your that, because you are now your own manager, right? But if you bought the NGX, the mutual fund or the ETF, essentially you are giving your money to someone to manage for you, right? So yes, you pay lower upfront cost because they're just buying one time. So you pay the same 1,500 instead of 7,000, you pay 1,500. You might pay an annual cost per year, but that cost per year means you don't do anything. You don't chase your dividends. You don't chase this. You don't chase that. You just buy. The guy manages it for you. If a share goes down, let me give you a good example. The best stock in Nigeria, the second best stock in Nigeria for the whole of 2025, the second best stock in Nigeria. This year, like in January, they were removed because the stock was delisted. So imagine if you had gone on your app in July last year, you saw that stock, it's a banking stock, kind of banking stock. You saw it going up in price and you bought that banking stock. You bought that banking stock, you made a lot of money. You now told your friends, hey, buy that banking stock. Your friends bought that banking stock. The stock price went up, it became the number two best returning stock by price appreciation in the Nigerian stock market. By January this year, they removed the stock from the stock market. They delisted it. January, December it was the best. January it was off. If you had bought an NGX 30, you had a manager, they would remove it for you because they are on the market. They will just take it off the index for you, or they will take it off the portfolio for you. But imagine if you bought that stock, you were on holiday in Greece, you didn't know what's going on. You still have that stock. It's now zero. So on your paper, you say, oh, I've made a lot of money. In reality, you've made zero. This is why you need to have professional managers, because you don't know, this is not your job, right? It's not your job to track these things day to day. But the professional manager would have said, hey, we're getting out of this stock. You might have seen it before or after, but that's why you need professional managers. Don't try to do this at home. You know what I mean, right? So that's a real life example of why you need professional managers. And if you Google that stock, you'll see the stock I'm talking about. Number 2 in December. This year is gone. Yeah. So it's a serious market out there. So let's continue. Let's go on and see other stuff. So what I've done here, I've now showed you guys the Nigerian side. Let's talk about the Nigerian market, right? Which is this one right here. If I want to buy shares in Nigeria and I want to go to my app on Bamboo, I just go. You want to look at that search box, that box that says search. How you want to buy stocks is this. You do your research, you get the ticker of the stock. Every stock has got an official name. So my colleagues say the ticker. You want to get the ticker, right? If you get the ticker, then you then go and you put that ticker on the Bamboo search app and it will give you the particular stock. Don't use the name. Try to use a ticker because you might use, in America has Fidelity, Nigeria has Fidelity. So which Fidelity are you talking about? I'm just giving an example. But if you use the ticker, it's going to give you the exact same stock. Ojon is asking me real quick, is it better to buy stocks directly or an equity fund? Eddie, I just explained that. I think if you have the funds, you can, if you want to buy individually and replicate the index. But if you don't have enough money, like you have 1 million, 2 million, buy the index. But again, even if you have money, if you're not going to manage it yourself day to day, buy the index. So it's really a question of how much time do you have? How much experience do you have? You might have 1 billion, but you don't have the experience or the time. Buy the index, right? Okay. So if you then get that ticker, right, guys, you get the ticker. With the ticker, you are then able to then buy the stock. Get the ticker name, then put it into that search box, and then you can then buy it on Bamboo. So what I've done here for you guys on Bamboo, I've compared 2 stocks here, right? I'm comparing the NGX 30, right? And also a growth stock, not stocks, ETFs. So there's a Stanbic ETF 30, which is the 30 most cap stocks as an ETF. I put it there and I'm comparing with the Meristem growth fund. So growth funds will be more of smaller caps, but ETF 30 will be more of higher caps. You see, that's what Bamboo lets you do. You can compare both of them. I've compared these guys for 5 years. So for 5 years, it's letting me know that if I bought the NGX 30, I'm making about 21%, right? If I bought the small caps, I'm making about 63%. Remember, guys, last time we were here, we talked around which is better. Is it the large caps, the NGX 30 stocks, or is it the small caps, the rest of the market without the NGX? What we found out was that the NGX 30 stocks are going to give you consistent growth. They will not grow as fast as the rest of the market, but they're not as volatile. What's an NGX 30 stock? You have your MTN, your Dangote Cement, your BUA, all those stocks. They will not go up 100%, but they will not go down 100%. So they are your stable stocks that you're going to earn your dividend from, less volatility. Your rest of the market stocks, Presco is up, I think, about 6,500%. That's 6,500% or something like that, something crazy. So Presco has gone up, Beta Glass gone up 4,000%. So the rest of the market will go up, but also come down. Guess where that bank stock I'm telling you about that was number 2 in the whole market 2025, but this year delisted? Guess where it was? Of course, it's not an NGX 30 stock. It's a rest of the market stock. So again, you want to ask yourself, where am I going to be? Am I a rest of the market stock guy, or am I an NGX high cap? In other words, are you a high cap or a low cap? Again, this is not advice, but look at it this way. If you are younger, you don't have money to invest. Your job is to grow capital appreciation of your 1 naira to 2 naira. You're looking for 100%, right? If you buy the NGX, the big boys, it won't grow 100%. It will grow maybe 25, 50, but it's giving you stability. But when you are younger, you have the advantage of compounding. You can take more risk. So what if a younger guy bought the rest of the market? He's going to experience faster growth with more volatility than a guy buying the NGX 30. In other words, if you're in the US, for instance, and you bought the Russell is your low cap index, right? The Russell will grow faster than the S&P 500 or the Dow Jones 30, right? But when the recession comes, which one suffers first? The Russell. So if you're a younger guy and you want to grow, the all share index, the growth stocks, looks like a sure bet for you, right? Because you are getting more volatility. That volatility is what is translating to your shares appreciating in price. More volatility affecting that potential growth. It's not a guarantee, but that's what is going to happen in that arena. Versus you want to buy your Dangotes or your MTN, where you're going to get your 25%, your 50%, 40%, but it's not going to crash 50%. Dangote is not going to crash 50%. It will go down 10, 15, but it's not going to go up. You get the point. So again, are you younger? Are you older? If you're younger, you're a growth guy. If you're older, you're a value guy. That's essentially how they say it, So just keep that in mind. Again, it's not a rule, but it's how it usually would pan out, right? Let me give you a better example. If you want to buy land today, there's land in Lekki, not even Lekki. There's land in Ikoyi, and there's land in Ikorodu. Today, everybody's going to say, oh, I'll buy my land in Ikoyi. Why? Because Ikoyi is sure banker. If you have a plot of land in Ikoyi, you want to sell it, somebody will buy from you. The price will not crash. Even if Nigeria crashes tomorrow, Ikoyi land is Ikoyi land. It will not go to 10 naira. The land in Ikorodu, you can buy for 100 naira today. Tomorrow is 200 naira because it's still underdeveloped. There is, quote unquote, nothing in Ikorodu when you compare to Ikoyi. But what if tomorrow government says, we're going to go to Ikorodu, we're going to develop the brand new Ikorodu city, roads, rails, power. What happened to Ikorodu land? It will triple in value. The same thing. So Ikorodu is a growth stock. Ikoyi is a value mature stock. Ikoyi is not going to go up by 100%. No, it won't. It's that what you're seeing is inflation. It won't go up by 100%, but it won't fall. Ikoyi land will not become 100K because Naira has fallen in value. Ikoyi land is not going to fall. But Ikorodu land can fall. People can say, no, there's too much crime here. We'll move away. It will fall. Or land in your village. I hope that makes sense, right? So keep that in mind when you buy. Which are you buying? Value and all that. So let's look at this stock. Let's look at this portfolio now, right? Let's say we want to now use what we learned about aggressive and conservative. Who is aggressive? Aggressive is that young guy that wants to grow his principal. Look at the word now. He wants to not grow, double that principal. He wants his 1 naira to become 2 naira. The principal, not the income. He wants to grow the principal. Who is that guy? That's the aggressive guy. Who is the conservative guy? That's the guy that he wants to make money on his principal. So he wants to put that 1 naira, then he wants to make more money on that 1 naira. So aggressive and conservative. This is a 30-year-old guy. He's an aggressive guy. How is this guy investing? Again, when I give you this app, they're all educational. You can pick this apps, this fund name, I mean. Go to Google, get the ticker, go back to Bamboo, put the ticker on the search bar, and you can see it, right? So the ARM Aggressive Growth Fund, hear the name, Aggressive Growth Fund, which means when you buy that fund, they are chasing growth. So what does that mean? We've talked about it. What that mean? There is volatility. The share price can go up, it can also come down very quickly. But this guy is putting 45% of his funds into the ARM Aggressive Fund. He has a million. He's putting 450K in there because he wants to grow. His focus is long-term capital growth. Long-term capital growth. What's the next thing he's doing? He's doing a Stanbic TC equity fund. Equity fund is going to buy everything, not just aggressive, buy aggressive and value. So he's saying between aggressive 45, he's going to add more equity, 30. So about 75 on equities alone. Very aggressive. Then he's saying he's going to buy the ICO equity fund, 15%. Again, ICO equity fund a bit, it's aggressive as well, but not as much as the ARM aggressive fund. Then he's going to do UBA equity fund just to give him, that balance. And if you read the prospectus, you will see what these funds do. You will see this thinking behind what this guy is doing. But in essence, his total fee is going to be about 15,000 to 17,000. If he's going to use the 1.6, he's going to use to buy all the shares, right? It's expected if we use last year's return, if you had bought the stocks last year, about 16 to 19. Someone's going to say, wow, but stock market did 50%. Why is this guy doing about 20%? Because you are buying everything, the losers and the winners. If you go buy the individual stock, you can make more money, but if that stock goes to zero, if you mistakenly bought that bank stock that was number 2 and was the listed, you make 0. But here at least you make 20%, right? So this all Nigerian growth is basically what that guy will do. Look at the conservative guy. He's still in equities, but he's only doing 40% in the equity fund, IBTC. So he's saying, I want equities, but just 40% enough for me. Then he's also doing equities with the AIM Discovery Fund, but that's a balanced fund. Balanced fund, you see, 35%. So he's not doing aggressive, he's doing balanced, he's doing equities. Then he's just going to do the Fidelity Equity Fund as well, 25%. So it's the same equity, same Nigerian stocks, but because a conservative guy and is looking at it, that's what's going on. Olumide, what's up? Hit me.
I wanted to add some color to your conversation. Well done, Kalu. Good evening. And it's always great for you to bring out conversations like this, despite the fact that we are in an era where young Nigerians are increasingly interested in the capital market. And all you said was totally spot on, but I just wanted to put in some perspective at the localization of each asset. So if you look at the Nigerian Mutual Fund, first thing I would tell you is like everything Kalu said was on point, but if you really apply all the things Kalu said, you might get into trouble, not because he wasn't right, but because the Nigerian market is largely inefficient. So let me go straight to the point. If you look at our mutual fund market, for example, it's very illiquid. When I say very liquid, I'm talking of on all classes combined. Now, there's what we call net asset value. In mutual fund, that's where you know the true value of an asset. And I recall when I did a tweet, because I invest in almost all assets in the Nigerian stock market, because I write in the space, I also invest, and I also talk to stakeholders. So I don't just make comments. I'm also a stakeholder in terms of positioning myself. So I can tell you pretty much that many of these assets, they are doing well, but I've not been. So I have Stanbic ETF, for example, and it's worth more than 8 figures in Naira. And I have been able to sell only 30%, There was a time it even crashed, and I remember when I put it out there that it was up thousands of percent. Some of these textbook experts came and said that I was not right because they were looking at the net value quoted on Stanbic. But we didn't know what was happening because there's this gap in the market. There's so much gap. So if you are very liquid, for example, if you're somebody that has above 15 million, for example, and you want to invest in mutual funds, I'll just tell you to stick with the money market fund. You're safe there. It's very liquid, it's safe. Stanbic is the king of the jungle, has about, I think, 3 trillion under management. So they don't give you the best management fee, but everybody understands that it's more important. Safety of funds is more important than the return of funds. So you have to look at that. Then, if you want to increasingly want to invest in what Kalu is mentioning, then if you are thinking of putting a lot of money, you might get into trouble. Like what I'm saying, for example, I have funds in different markets, and I can tell you that Nigerian stock market is very liquid in terms of our market funds, the mutual funds category. So that's one part. Then the US stock market, yeah, you could see that the Nasdaq is at all-time high. I remember when Kalu was talking about the fact that when the market was down during the Iran-Israel war, even though I was more pessimistic. He said that this was a time to really buy or hold. And I think he's right, because you look at the market right now, the market has added 7.5 trillion naira from the March dip. $7.5 trillion from the March dip. You could see in BTR 5 trillion. So capturing the mutual fund and the mutual fund ETF, it's a very beautiful place in America, I'm telling you the truth. Because I also have exposure in those markets, and I can tell you for free that it's one of the it has served the function of diversification. Because, for example, you don't need to say, okay, you're choosing. If you invested in Nvidia, I can tell you that the person that invested in semiconductors ETF, categorized under ETFs, really has done well, because if you look at macro, look at the semiconductor category, they even doing faster than Nvidia. So yeah, it works well in the US. So I want you guys to be very careful, because you need to understand that different things work in different markets. And also, Kalu says something that is also very important. You need to understand. Now, if you look at it from your perspective, what is your perspective? Many of us here, like some of us are already in our media, many of you guys here are under 30. And you need to understand that the market right now is at an extended bull run. And the reason is not far-fetched, because the pension reforms, now pension funds can take risk. So it's not really retail participation, because many people still have low disposable income. And if you look at most of our cap stocks, they have a very manipulative, I don't want to use the word manipulative, but they have a very opaque structure whereby the floating rules don't allow market efficiency. So, for example, if you look at Dangote, Boa, you look at Transcorp, you look at you see that the number of participants there are low. So that makes price inefficiency higher. And that's what you don't see. And that's one of the problems Dangote might have. For example, if it doesn't increase the amount for market to access, he definitely cannot list like that in the UK or in the US. So I also want people to understand the risk that it's not just buying stocks that matter, is your liquidity power, your earning capacity, your objective. So for me, for example, I remember when people were talking about UBA that results came in and was not as expected. For me, I'm even waiting for UBA to drop, because I will increase. I've always used UBA as passive income. So the strategy has worked for me over time. And the reason because is that look at the compounding effect. From the time President Subu has arrived to where we speak now, UBA has done more than 5x and has outperformed inflation and the devaluation of the Naira. So I will definitely look at a good entry that where the fundamentals still looks favorable. The bank is Pan-African and things like that. So I want people to also look at, you don't just look at textbook. Zeblat, yes, 10K now. Will I buy Zeblat? No. In fact, I wanted to sell Zeblat in January. I wanted to sell because I bought most of my Zeblat during COVID at 500. But when I saw Illumina buying, I said, how bad can it get? So I waited. So I get agitated when people are now looking at Zebra at 10,000, I'm still interested. What are the fundamentals changing? You need to also look at oil prices are high because of Iran war, but the war is going, the lower of oil is going. So the risk, the premium you guys are betting on this is not an Anthropic or open AI. You need to understand what you are buying and don't just buy because people are buying all the names. GT, can tell you over and over. There was a time GT fell to 69 2 or 3 times now before it bounced over. So people need to be careful. That's all I just want to say, and understand that every asset classes have their place. Thank you, Kalu.
Fantastic, Olumide. Fantastic. Thanks for that. So again, just summarize Olumide saying, overall, if you are trying to invest for the long term, you want to be in equities. If you're doing, I want to invest for 1 year, 2 years, overall, don't come to equity market. Don't come. Don't come, because it's a market that works with compounding. It works with what is compounding. You make 10 naira, you put that 10 naira back, you allow time to work in your favor. If you look at that chart I showed you when we started off, I said you earn, you save, you invest. Then what's the word? If you look at those coins, you compound, you sit there. So overall, if you're not a long-term player, don't do stocks. Don't chase returns. Like this, the title of this space is objective-based investing. You invest according to your objective. Like Lumde is saying, if you can't afford to sit, this is a guy that's this is a 30-year-old guy. All things being equal, if you're 30 years old, you should have at least 35 years investing ahead of you. If you are 60, you have less years ahead of you, right? So less years ahead of you. So this is the point we're going to make. You've got to diversify equities, fixed income. But if you want to do equities, this is how you do it. Why are we saying funds? Because you don't have the money. So we're not going to say because you don't have the money, you shouldn't invest. You have to invest one way or the other through equity funds, right? Because you don't have the money to go. A million is very generous. Less than 5% of Nigerians have 500,000 naira in their account. Less than 5% of Nigerians have less than 500,000 naira in their account. So if you look at, I did a comparison between sports betting and investing. There are about 60 million stock betting sites in Nigeria, 60 million. The total investing number of CSCS opened in Nigeria is about 6 million. Of that 6 million, only about 300,000 are active. So Nigerians don't invest. And they don't invest because these things are very expensive. If you want to buy Seplat, where are you going to get 2,000 from? How many kids today can afford 2,000 naira to buy a Seplat stock?
But those, actually,
how much? Oh, geez. 10,000. You know, who can afford it? But rather be in the game by using the funds. Be in the game, right? Than saying I'm going to wait till I get a job and I invest. Because if you wait, the market doesn't wait for you. So you lose out on the compounding. Remember, what we're chasing is compounding. Hope that makes sense to you guys, right? Thank you so much. Just make sure that Olumide has given you guys some good information. Olumide, I give clarity to that, right? Olumide, don't go anywhere. We're still going to call you once we are done, right? So you can just come in and talk there. And don't worry, guys. I see all the requests. We're going to get to open forum very soon. It's going to run through very, very quickly, guys. Okay. So now the same with the US stocks. If you are doing US stocks, again, Bamboo gives you all the US stocks. It's the same principle. Get the tick, go online. You want to buy, you hear this company is doing, let me give you a good example. There's a war in Iran. How do you make money if there's war in Iran? How? What is going up? What is coming down? If you notice, they are saying oil is going up. Oil is too broad. What's oil? What's going to make money? If you look at the markets very well, you see there's something called helium. Helium is used to cool data centers. So data centers are a growth stock in America. So the whole AI thing cannot work without data centers. So you need helium to cool data centers. Who is the top manufacturer of helium in the world? It's the US, it's Qatar. Where is Qatar? Qatar is inside the Gulf of Hormuz. So Qatar cannot get helium out. And even if they could get helium out, they've blown up their helium production. Iran has blown it up in the war. So who is the number one exporter of helium even before the war? US. Which company in the US? ExxonMobil. So, Kalu, you are telling me that if I buy ExxonMobil, I'm getting exposure to helium. Yes. What is the share price? If you hear a share price is $10, what does that $10 mean? It means that the discounted value of the future earnings of that stock is $10. So before the war, What was the price of ExxonMobil? Let's say it was $10. Now, because Exxon is going to sell more helium to China, to the Europe, to cool data centers, what happens to the earnings of Exxon? It's going to go up. If earnings of ExxonMobil go up, what's going to happen to the price of ExxonMobil? It's going to go up. Earnings are your predictor of prices, earnings and volume. Earnings are future, volume is more of today. So that's how you look at it. When you do this research, you then say, oh, you ask ChatGPT, who are the exporters of helium? It will tell you Exxon and Qatar. Okay, you go to you now want to buy Exxon. What's the ticker for Exxon? You get a ticker, you go to your bamboo, you put a ticker on the bamboo, then you buy. If it's too expensive for you, you can't buy individually. Okay, you ask ChatGPT again, what ETF has a higher proportion of ExxonMobil as a composition? It'll tell you this stock fund has 40% Exxon, this fund has 20% Exxon. Okay, you take that fund, the ticker, you go back to bamboo, you put it there, and you buy. That's how you invest. Investing is about news. You can't be dull, or you don't like news, or you don't like events, you don't watch CNN and you say you want to invest. Oh, you're not going to invest properly. It's not the buying and selling. The research to know where to invest the money. That's where you want to buy. But let's say you don't want to do all this. Okay, I'm going to give you a strategy on how you can buy stocks without doing all this back and forth. But again, on bamboo, I can compare VTI and VXUS. So what is VTI? What is VXUS, right? What does these things mean? I hope the next slide has that. Okay. This is a chart that I want you guys to try to copy and save. Just keep it somewhere handy because you refer to it all the time. When you want to buy stocks, right? You want to buy, like I said, you want to buy the individual stocks or you want to buy the index. Index from who? Index are done by companies. So if you notice, the larger, we used IBTC because they are very, very large in the stock market. In America, there's a company called Vanguard. Vanguard is very, very large. So because they are very, very large, when you want to buy shares, the expense they're going to charge you is very, very little. The expense rate, very, very little. All right. So if you want to buy stocks, let me give you guys what I call the Vanguard strategy. You can use Schwab, the exact same tool work. You can use Fidelity, the exact same tool work. These are the companies that are hosting this name. So if you go and you put this name I'm going to quote for you, you say, what's the Schwab equivalent? It'll give it to you, but it's the same strategy. So let's say you want to buy all the stocks in the world. You want to have global diversification. You want to buy Samsung. You want to buy Tesla. You want to buy Dangote. Global diversification. You just buy the VT ETF. So it's there on your screen. It's on YouTube. It's on Twitter. VT. That's a Vanguard ETF. You buy that. You've bought bulk of the stocks in the whole world. Whole world. Madagascar, if it qualifies, US, UK, Canada, France, everything's going to be in VT. Let's say you now want to buy, you don't want to buy the whole world. You want to buy only American. So you buy the VOO. VOO, again, that Vanguard, VOO. VOO is going to track the S&P 500, which is the top 500 stocks in America. So you're going to buy VOO, top 500 stocks in America. Large cap, so it's slow moving. Large cap, slow moving. What about, I want to buy American stocks. I want more than 500. I want to buy more. I don't want just 5, I want to buy more. Where you look at the VTI, the VTI is going to give you total US stock market. Not everything, but about 4,500. VOO is 500. So you see, you're buying the same US, VOO and VTI. Same US, but VTI is giving you about 4,500. What if I don't want to buy America? I want to buy the whole world apart from America. So you go buy the VXUS. VXUS. That's you're buying Samsung, Alibaba, Shell. You're not buying the US. VXUS. Okay, Kalu, I don't want to buy stocks. I just want to buy bonds. Sorry, real estate. I just want to buy real estate. You go buy the VNQ. That's a REIT, a real estate investment trust. So it's going to give you exposure to property without stocks, just the US. If you want to buy bonds a day, there's BND. You buy just bonds issued in the US. The point I'm making is that you can just use this one company and build an entire portfolio. With US, non-US, property, you can drill this down to, I want to buy financial to give you. Just go to Google, ChatGPT, Grok, ask it. It will give you the company, you take the ticker, you go back to your Bamboo app, dump it there, and you buy it. That's it. Again, is that you have to understand what you're doing. It's not a question of what's the stock price, but look at the news. You look at the news, just watch news. You hear this company is doing this. There's Iran war. What is the economic story behind what you're hearing? There's World Cup happening. What's the economic story? Who are the sponsors of the World Cup? Visa. Oh, will Visa make money in the World Cup? You check your data. You ask ChatGPT, does Visa make money during the World Cup? Yes or no? If they're going to make money, okay, should I buy now? Should I buy tomorrow? That's how you invest. Knowledge with this data, look at the past financials, then you take a position. You should have taken this position for World Cup last year, not now. If you do it now, you're already buying at a elevated price. Make sense, guys? So that's the V strategy for you. So again, you can do all this comparison of ETFs and all on the Bamboo site. We're almost done, and we'll have a lot of questions. I'm going to go straight to the question. Like I said, you gain volume is something we don't look at. We always look at the price. We don't look at the volume. So let's learn to also look at the volume. Volume tells us if that price we are seeing is supported by real action. If we see a stock price going up 100 naira every day, 100 naira every day, but the volume is very little, that I tell you is manipulated, right? So you always want to cross-check the volume numbers. And again, you can get that also on the app. Bamboo gives you this order book. So you can look at your order book. You can see who is buying what. You can see on this order book about the average price is about 3,700, about 245 trades. So you can tell that, okay, people want to buy this stock. People want to buy this stock. It's about 245 trades, about bidding for about 2,700. If you start to see high price movements but low volume, run away. That's manipulated. That's one or two brokers are pushing that stock up. But if you see high volume, no offer, whoa, that's where you want to be because that share price is going up. So if you don't see that, we now go and look at what's the corresponding stock. If I see high bid for MTN, nobody's offering. I look at Airtel. What's happening to Airtel? If it's simply not happening there, I want to take a position there because it might rub off on Airtel. If I don't see it in Nigeria, I go to Airtel UK and look at it as well. So you're looking at volume as a flasher. It's flashing you, hey, people want to buy this. But if I'm seeing movement in price, no volume, I'm not too impressed. All right, guys, second to last slide there, and then we'll call it today. Yeah, so I wanted to give you guys this one, right? This is more of a balanced portfolio. Someone's asking me, yes, but you just gave us only equities. What if I want to buy not just equities, I want to buy a complete balanced portfolio? Again, I will stress at the very beginning, this is educational. I'm teaching the concept, not selling the equities. I'm teaching you the concept, not telling you to go buy the stocks. Look at what I'm doing here again. A 30-year-old guy and a 60-year-old guy. This 30-year-old guy wants to have a diversified portfolio. So again, what's he doing? Aggressive fund, he's doing 35. Discovery balanced fund, he's doing 25. So his equity position about 55. He's being very aggressive with 35. He then balanced it with 25, 55% total in equities. Look at what he did there. Chapel Hill Denham REIT property. He's doing property for 15. Young guy wants to do property for 15. Then he's buying dollar. He's buying dollar as insurance on his portfolio. Hi, this is Naira. Let me buy dollar fund and sort of protect my portfolio. Then he bought money market at 10%. So this is like a global portfolio. This guy is saying, I want to get long-term growth, inflation, and Naira hedge. That's what he wants to do. Remember, you have to have your objective. Then you invest according to your objective. You just don't go buy. Objective, invest according to your objective. What he's doing about 70% yield, fees about 1.6% to buy this portfolio. It's a long-term guy. He's 30 years old. Let's look at the 65-year-old guy. He wants to do capital preservation and inflation protection. That's what he wants to do. Hence, what's he buying? Money market. Money market 35%. We didn't see equities there. Money market 35%. Why? Capital preservation, income, and inflation protection. He wants to buy ARM market fund. Again, stability. He's also buying dollar 15. Then he's still buying equities, but he's only buying the balance fund and only 15% to give that portfolio some growth, right? So his goal determines what he's buying. There is no good or bad investing. If you want to go on a date in Lekki, you take your Ferrari, pick up your date, you go to your date in Lekki. If you want to take cement from Lekki to Kano, you go and get a 911 truck, load your cement, and go to Kano. The Ferrari is not better than a 911 truck. It's just your objective. You can't use Ferrari and carry cement. Nor can you go for a date with your 911 truck. What you want to do determines where you invest and how you invest. Keep that as a lesson that you've learned today, right, guys? So, guys, we're going to end our session, and then we'll just open up the floor to you guys to ask your questions. Again, guys, like if you want to support me, I've got lots of social media handles: Facebook, Instagram, YouTube. Like, follow, subscribe, buy my book, give it a gift to a friend. I wrote that book for you guys. I've got tons of experience. I wrote that book with Nigeria in mind. Very simple to follow. Lots of pictures. You will like it. Buy, give to someone, right? And you will bless that person. Let's start with Casey. Casey Desmond. Casey Desmond, how are you doing today? You've got the mic. Please go ahead. Desmond is off. Desmond is not there.
No, I'm on, Mr. Kalu. I'm on.
How are you doing, sir?
Good evening, sir. Good evening. I'm very good. Okay, now based on the mutual funds that you were talking about, you guys always make mention of using bamboo to invest in the mutual fund. Now, I got interested in this thing as of last year. Then through Access Bank, I'm using Access Bank as my bank. So through Access Bank, I got to know of Corona Access. Is kind of like an investment platform now. I think it's affiliated to Access Bank. That's why you see them on their app there. Then I had to try putting money there on the mutual fund side, the money market. But then at the long run, when I wanted to add the money from that same Access Bank app, the option of adding the money is no longer there. When trying to withdraw my money back to the options are no longer there. I try writing to Access Bank to know.
Yeah, I can't speak about those. I don't know those guys. So are you asking me? I don't know those guys. So you want to talk to Access Bank directly?
Exactly. That's what I wanted to ask. If you know about those guys and if they are safe, just like
I don't know who they are. I don't know the name you're calling. I don't want to comment on someone I don't know about. So I'll mind if you don't ask me. If you can send me a DM, but I can't just speak on. Send me a DM and I'll take a look at it for you. Are they SEC? The first question you should want to ask is, are they SEC registered? If they're not SEC registered, you're on your own. Yeah. So, but send me a DM with the name and all that. I'll try to get back to you. Right? Send me a DM. Don't miss on that. Yeah.
Okay, I think that answers the question. Thank you.
You're welcome. I don't know what question was answered, but I hear you. Could I see?
I just wanted to know how legit they were. You saying you don't know about them means they are not really that.
It doesn't mean don't imply anything I've said or haven't said. You might be quoting the wrong name. So if I don't see the name, if I don't see the DM from you, I can't give you an opinion. Don't imply anything I've said. I have to see what you're talking about before I can answer. Yeah. Don't make any implications. Yeah. All right, Desmond. I've got Kudai.
Thank you.
Very welcome. I've got Kudai. See, where are the ladies on this app? I can hear you. If ladies don't ask any question, I will close the app down. We're talking about we need to get the female folk to invest. So please plan to see more ladies asking questions. Please go ahead. Kudai. See, hi.
Yeah, thank you very much, Kalu. I enjoyed your when you were explaining about the bamboo last week.
Your audio is very low. But go ahead.
Oh, okay. Can you hear me now? Can you hear me?
Sorry. Jeez, man. Go ahead.
Can you hear me?
I can. Go ahead.
Yeah. So I joined this last week, and this week also I joined midway. So I'm a first timer using bamboo. I have registered long time ago. Hello, can you hear me? Sorry.
Yes.
Yeah, I have registered a long time ago, but I didn't get to use it. So I just want to use it now. So I know somewhere that they were talking about the tax. I saw somewhere the tax because I've not bought anything. So there's nothing there like the tax. So I just want you to shed more light about the tax because I'm in Europe and I know how they love tax. The money for anything about tax. The life is depending on tax. Now, you're buying from a US stock or something like that. How will I be able to pay tax? Or how does the tax work? Because now, maybe perhaps I want to apply for a visa.
Yeah.
To go to US. You know, those people do dividends because they use mutual or something like that.
Mm.
Can that be an influence or something like that? Like, I just want, how does the tax work? If I buy a stock now, am I to pay tax to US or how? Like,
I get your question. Let me answer. Okay, I get your question. It's a great question, by the way. Yeah. So when you buy through the fund, they take care of that for you, because when you are buying, the fund is paying the taxes on your behalf, not you individually. That's what you're paying that management fee for. In Nigeria today, when you buy a collective scheme, so you buy an ETF or a mutual fund, for instance, right? You will not pay any taxes on the dividends they pay to you. That is tax exempt to you, the individual investor, because the fund is going to pay those taxes. The same way, if you can buy into the US has their own rules of social security to buy a fund, right? But let's say you buy through Nigeria, there's a way they buy it for you through an American quoted to an American stockbroker. That stockbroker they normally give you a W-8 to show you are exempt or you pay the taxes. But the point is that they will take care of that for you. So what you are getting is net of any assessed taxes if they were assessed. So you don't have to worry too much when you are buying via the fund. They will take care of all that for you. They'll just give you your position and you are good. Hope that answers your question.
Yeah, very, very, very. Thank you very much.
Excellent. All right.
Thank you very much.
Excellent. I appreciate you, sir. Yes, sir. You have a good one. Take care. Let's do Ben. Ben, how you doing?
Yeah, good evening, Kalu. It's good to be here. Thank God the last speaker mentioned something about tax. I wanted to ask you, there's a post someone sent to me, one of these banks sent me a message about withholding tax, a 10% withholding tax on interest earned from treasury bills. So I don't know if you have any comments on that.
I know that the long dated bonds are now tax exempt, and I don't know about I know the withholding tax. If they're doing withholding tax on your treasury bills, that should still be legal. All I would say is keep your records. Keep your records for next quarter 2027. That's what I would say. Everything is in a flux for now, because they haven't released certain things that they should have released. There should be a guideline today on what we call 1099, which is what the investor is actually going to file in next year. They haven't released that. So I would say, using the past FIRS guidelines, if you are charged a tax on a short-dated investment, that might be correct. Keep the documentation. You will need it when you file in January to March of 2027.
Since it's WTH.
Correct.
Since it's WTH, most people don't know that they can still claim it as credits. So it will be deducted from whatever you pay as PIT or CIT, as the case may be.
We will know what they will decide on that, because for now, like I said, don't have the final guidelines.
That's how WTH works now, Carlo. That's how WTH works.
Let's wait for them to give us a guideline. Like I said, we'll just wait. Once they tell us that's how it works, would apply. There should be a guideline on what is a 1099. In US gives you a 1099. You use your 1099 to file the taxes and you deduct. Okay, Nigeria should come out and say the same thing. This year, if you have bought treasury bills, you can deduct your withholding tax, or you can't. We can't assume. So, like I would just say, let us wait for the government to say this is how they want it to be. They have to come out, because we have the 100 million issue. We have so many issues that are there. So
that one has been cleared.
I know. So
that 50 has been cleared.
Good, but let them clear the others. I'm just saying we'll wait for official. I won't tell anyone what to do. Just keep your records for next year, and then whatever the government says, go ahead and do it. Yeah.
Okay. Then my question was on how do you rank mutual funds versus ETFs? How do you rank? How do you compare both of them? I just wanted to hear what you have to say about that.
In Nigeria or the US?
In Nigeria.
In Nigeria, I would prefer to invest through mutual funds and not ETFs. The reason is this: I don't think Nigerians understand ETFs. They don't understand the advantages of an ETF. So if you look at the total volume growth, that's what I was talking about. The volume in the ETFs in Nigeria is very, very little. So when you invest, it's harder to come out of it in an ETF. Nigerians understand equity mutual funds. They've not yet understood what an ETF is. It's almost the same thing. And I think ETF has got better attributes in terms of tax advantages and also the trading advantage. But I don't think Nigerians understand it. So because of that, in Nigeria, I would say if you had to buy two of them, I would rather go to the mutual funds simply because you have more liquidity. That's how I would put it. In the US, I would always recommend the ETFs over mutual funds.
In terms of risk, which one has a higher risk profile in your?
They are the same. If you take away liquidity, the risk is the same on both of them.
Don't you think there's an additional risk on ETF because of the tradability?
That's what I said. If you take away the liquidity, they both have the same, which means that's what I answered. On the tradability, the liquidity in ETFs is lower. So that's a huge risk. If you take that away, they are both the same.
All right. Thank you.
You're very welcome. Yeah. Okay. Super.
Great space.
Thank you, sir. Appreciate you. Let's get who else wants to speak? Desmond? Is that no Gospel RX? A lady jumped in and jumped out again. I'm sad, ladies. We need to get you all investing and asking questions. You guys are the chief financial officers of the nation. So we need to make sure that you guys are investing in this. I read a report that said women are less risk adverse. So it's good and a bad thing. Women don't take risks. That's good. It's also bad. Because if you don't take risks, that's no volatility. Without volatility in an economy like Nigeria, how will your portfolio grow? So I need to hear from the women. They need to tell me why they're not investing and all that. Gospel, how you doing? Gospel, you've got the floor. Gospel RX.
Thank you very much, Kalu. Good evening. Can you hear me?
I can hear you, sir. Please go ahead.
Thank you. Right. I came in a little bit late, so maybe I don't know if I missed some part, but from what I can see, we're talking about mutual fund. I want to believe it's also talking about mutual fund in Nigeria here.
Yeah, I think, we're talking about goal-based investing. We are saying that when you want to invest with the goal in mind, right? So what's your goal? You invest. Then we're saying in Nigeria, you can use the apps to then buy into the mutual fund, the ETF, or even the individual stock. So we're just saying invest according to your objective. Yeah.
All right. Okay. Thank you. That being said, I currently am investing in mutual fund using the Stanbic IBTC money market listed. But the fact is, recently the returns has been going down. I think sometime last year it was 23%. Now it's around 15.56%. So some of us are quite worried around it. Some people are even thinking of changing, looking for a different investment option. Personally, I'm also thinking about looking for a different investment option, to be honest. And then I attended the webinar they hosted sometime last week. So I also was trying to find out from them about they also have the equity fund. And that one is not very clear to me yet how it works.
Which one are you invested in? Which one are you? Did you say you invested in?
Market.
Oh, yeah.
That is in mutual fund.
Money market. Go ahead.
The returns are getting lower, and that's a problem for me. Like I said, it was 23%, now it's about 15.56, and it seems to be coming downward. So I want to just maybe your comment around that in terms of is it advisable to continue with the mutual fund in terms of safety, in terms of returns going forward? Then I also want to comment around equity fund. Yeah. Generally. Thank you. Especially as it relates to Nigeria. And Nigerian investment system.
Okay, I think you are respectfully, so you are using the words interchangeably that might not be correct. What you have is the money market fund. That's not a mutual. So that's a money market fund, right? It's investing in deposits, treasury bills, fixed income, bonds, deposits. That's what that money market fund is. The one you see is coming down. It's coming down because interest rate in Nigeria is coming down. what we call the monetary policy rate in Nigeria. That's where when the banks want to borrow money from the center, they want to get money from the CBN, they use that rate to lend to the banks. So if the banks were borrowing before, they were borrowing at maybe 29. Now it's down to about 25. That's why you see your money market rates are coming down, because the banks are adjusting to the fall in the monetary policy rate. It's not, you can't get a better rate outside because it's Nigeria. So it's not as if that company you called is reducing their rates and others are going to increase their rates. No, it's just maybe the composition of what they are invested in. If you invest more in, say, maybe federal government bonds, you get a lower rate, but you get more certainty and more safety. But if you invest more in commercial paper, you get a higher rate, but you have a higher volatility. So if you want to shop around, right, go on your Google or your Grok or your ChatGPT and ask it which funds are the biggest investors in commercial paper in Nigeria. That's where you get the higher return. But like I said, you get the higher risk. If you ask it which ones are the highest investors in fixed deposit or treasury bills or federal government bonds, you will get the lower return, but the higher safety. So it's your call. Choose where you want to do your fixed income. The SEC publishes a list of all the fixed income. Some are very, very high, some are medium. But that's why it's coming down. It's not a problem per se, sir. It's the whole economy is really coming down. Then I think you're asking about mutual funds. I don't know if you can see the visuals on Twitter and YouTube. We shared the visuals of educational asset allocation that we have done. We put an aggressive and a conservative 30-year-old guy, 60-year-old guy. We're trying to show you that who you are determines how you invest. So I don't know how old you are, but if you are, for instance, a 45-year-old Nigerian, you're still a young guy. So you have more compounding periods ahead of you. So I would try to look at you and say, hey, you want to grow faster than inflation. So try to pursue a more equity-heavy position in your portfolio for the next 15 years or so. Then as you get to like your 60s, try to wind that into fixed income portfolios, right? So the mutual fund is what it's investing in. Does that make sense to you, sir? You have to have, when you buy a mutual fund, you know how those people buy bill of clothes. If you're buying t-shirt bill, you get t-shirt. If you're buying jeans bill, you get jeans. So if in Nigeria, people say, oh, jeans is what is raining, and you go and buy jeans bill, then you make money. But if people say jeans is raining and you are buying Akwoche, you will not make money because that's not what is raining. Does that make sense to you, sir?
It does. Thank you. And just to be clear, the money market fund I'm talking about, for example, the one that Stanbic is busy famous for, is a type of mutual fund, correct?
Correct. But they're investing in money market. So money market is those short-term cash investing, short-term. There's also mutual funds that invest in the capital markets, longer term, or equity, which is shares. So which one are you buying? If you go to IBTC, they have money market, they also have equity. So you have to be clear which one you are buying. The one that you're seeing is going down is the money market, because MPR, inflation are all coming down. So the rates they are going to pay you will come down as well. But the equity does not work like that. Equity is working more with they are buying shares. So if you have an equity fund that is buying smaller cap, it's more volatile, but giving you more money than if you have an equity fund that is buying NGX30. You have to choose which poison you want, if you can use that word. Does that make sense?
Yes, it does. And thank you very much. You responded very well to the first part. The second part that I was talking about, which you touched a little bit, is the equity fund. I don't know if you can just maybe throw a little more light around that. Thank you.
Can you be more specific? What do you want to hear more about?
Okay, right. So, like you said, there's a mutual fund, there's an equity fund. and you try to explain the difference between it in terms of the returns I'm talking about, where I'm saying that the returns are getting lower in the mutual fund or the money market fund, let me put it that way.
Okay.
So I wanted you to talk about, and you've also mentioned the long-term future of the money market and what have you. So I want to talk around the equity fund as it relates to returns in the near future.
Okay.
Basically.
Okay, so look at it this way, right? You don't mix the words. A mutual fund can have money market and equity. A mutual fund can be, there's mutual fund and ETF is the type of collective investment scheme. And that scheme can have equity. So it would be an equity mutual fund. It can have money market. So it would be a money market mutual fund. Understood? So there's mutual fund, and you can have an equity mutual fund and a money market mutual fund. The money market mutual fund is going to buy deposits, fixed income, bonds, treasury bills. That's what it's going to buy. Cash, money is going to buy in those type of asset classes, right? But the equity mutual fund is buying shares, right? So if you want to buy shares, what are the two types? So if you want to break it down, it's going to be small caps, medium caps, or large caps. You can also say you want to buy dividend paying stocks or non-dividend paying stocks. You see where I'm going to? Usually, small caps don't pay dividends. Usually. So if you look at Tesla, it's a large cap, but does not pay dividends. Tech stocks don't like to pay dividends. They like to reinvest that dividend and grow. But energy stocks pay a lot of dividends and they are large cap. Even if they are small cap, they also pay a lot of dividends. So these things are like a Venn diagram. They sort of combine themselves. So you have to go back and ask yourself, why am I investing? If I want to invest to get income, I'm going to buy equity for money market funds, right? Because I'm giving them Naira, they're giving me interest. I can also buy energy equity fund, because if I buy energy equity funds, they pay me a high level of dividends. So it's find out what you want to invest, get your short list and invest. I hope that I'm making sense to you, sir.
Yes, you are. Thank you.
All right, yes, sir. Just make sure you use those words correctly. Yes. All right, I got Kenny 234. Kenny should be in Nigeria because he's using 234. Kenny, what's happening, man? Is Kenny there? Let's get GeoX. GeoX, how you doing, Geo?
I can get just in the next 20 seconds.
No worries. GeoX, are you ready to speak? I have a few. Oh, geez. Twitter is kind of snappy for me. I can't. Ben, your hand was up a while back.
Yeah. I just wanted to add a little more clarification to what you were saying, that the mutual fund can be a money market fund or an equity fund or a balanced fund. It just depends on what they put in the baskets. Mm-hmm. There's some mutual funds that they will mix money markets, they will mix equities with money markets, And I like the fact that you went deeper into the types of equity funds, the different mandates that they have, whether they are dividend paying stocks and all that. I really like that part that you added. And I wanted to ask you, Kalu, in Nigeria, apart from bonds and treasury bills, what else did they put in those money market funds?
Commercial paper, dollar bonds. No, they separate dollar bonds into a separate one. But commercial papers are there, and then so it's treasury bills, commercial papers, fixed deposits. Yeah, those things are there. I think they separate the dollar into a separate. They have dollar money market. Yeah. Mm-hmm.
A lot of people have been very angry that the rates are coming down. It's just the economy. Nobody should be concerned that there's any issue. It's just the way the economy is going. Thank you for that.
It's not that they affect our own personal returns.
yeah, gospel. Gospel.
I know so many people. Some people are even scared that it's a problem that rates are coming down. I'm like, no, it's just when inflation goes down, because the idea when you're making those investments, especially money markets, the idea is to beat inflation. So even if you go to a country like US, if their inflation is 2%, their money market is usually 4%, 5%, 6%, 7%. It doesn't go more than 400 basis points above the inflation band. It's usually just for you to beat inflation. Sometimes it's even like very close, maybe like 100 basis points. So it's not something to be concerned about. is that anytime rates go up, anytime now rates go up, inflation goes up, those rates will go back up. That your money market return, it will go back up. If inflation is going up, it will go back up. If inflation is coming down and the MPC and all that is coming down, it will come down.
Yeah.
You know, they just have to now, if you're looking for more return, you just have to look towards purely equity funds. You know, or maybe a balanced fund, a fund that mixes it. Because a lot of people sleep on balanced funds. Because balanced funds are made to hedge, you know.
Yeah.
You know, there's downsides and, you know, upsides. So, yeah.
Again, remember gospel, right? If you look at an economy, right, you really want very, very low funds. I know it's going to hurt the investors, the retirees, but the economy has to have low cost of funds to create jobs. So when you have high interest rates, investors that put money in the bank make a lot of money, but SMEs are killed. And the economy is built on SMEs, not investors. So I completely respect you that you have money to invest and you are not doing anything wrong. But the economy has got to bring rates down. Let me tell you better, if the rates in the economy was 5%, there will be more jobs in the economy, more jobs. And you have to make your money by being an equity investor. If you are getting what we call risk-free money at 15%, the economy can grow. Why would I take a risk and build a refinery in Nigeria when I can take my money and just buy federal government bonds and go and sleep and make 15%? So the economy will never grow. So when you keep rates low, you force investors to leave risk-free and take risk. It is the risk that creates jobs. You can't create jobs by putting money in the bank. It is chasing risk, equity. That's what creates jobs. Every rich man in the world today has an incorporated entity. There is no one that is rich today in this world that does not have an incorporated entity. And when I mean rich, I don't mean Kalu Aja rich, I mean Dangote rich. You have to have an incorporated entity to be rich. That's wealth that you see today in the world is a very, very recent phenomenon. If you go back in the world before 1930, you struggle to find the middle class, even in America and Europe. The middle class started becoming an entrenched part of society from the Second World War, when they educated a lot of people that went to fight the war, and those people became middle class by working in factories that produce cars like Ford and all. That's where you got the middle class from. And to keep that middle class running, you have to have jobs being created by the SME, the micro economy, creating more and more and more jobs. If you just have high interest rates, the country can't survive. That's one big problem in Nigeria. So I hope that gives you some clarity. All right.
It does. Thank you very much. Please, before you move on, just quickly, I'm going through your slides from the your thread. So I was just looking at the page you were doing that comparison between the 30 and the 50-year-old man, and the example of the 1 million naira equity fund. I had to distribute it around. Is it on the Bamboo app you can do this? I mean, I saw your list of selection. I mean, you can.
Yeah, what I'm saying that when you look at the name, go to Google, get the ticker, then go back to your app and put that ticker on the search bar. You should be able to give you that particular. Those are just the name of the stock, right? So, for instance, if you see IBTC equity fund, get the ticker, go and find it on Bamboo. Yeah, it should be there. Right?
All right, thank you.
Fantastic. Kenny, what's up?
Yeah, thank you so much, Carlo. I just have a precise question on individual stocks, just to get a second idea. Started investment well in time with AI, like precisely Rigetti, D-Wave, and quantum computing. I mean, NVIDIA is very solid, no problem about that. But started maybe when it was like $5.
Wow.
Watching went up to 50 and was very big. But then it's because of something I wanted to keep for a very long time. But now I watch it swung back to like 16 and, hovering around that. So I don't. Will it be a good idea to, to stay? I mean, talk about the, like the crying of it coming from 50 all the way down again. Is this a good idea to remain, or maybe just to go all in for NVIDIA? And then what's your forecast for NVIDIA? Thank you. Just precisely on individual stocks.
Yeah, I mean, so overall, right? If you find a good stock, there's no need to sell it. If you find a good stock in a growing sector, you've got the two things you look for. Number one, the stock is good, which means it's got a good dividend yield, it's got a good return on equity, it's got a good return on assets, and all that. The stock itself is good. Then number two, it's in a growing market. So the market is expanding maybe 5 or 10% year on year. Number three, that stock has a big slice of that growing market. If all three are positive, 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 you don't want to sell it. Doesn't make any sense, right? The stock is good, the sector is growing, and the stock has a growing or large moat in that growing sector. Why sell? Why sell? Leave it alone. So number two, if you then say Nvidia went up and came down, okay, could you have made money from the stock going up and down without selling? Yes, you could have done a call. You could have sold call options if you wanted to, right? You'd have made some cash from that portfolio. Use that cash to buy something else without selling. That's your security, right? So that's what you could have done. But if it's stock is good, sector is growing, stock has a growing company, has a growing sizable share in that growing company, no need to sell. Let's talk about NVIDIA. So let's go ahead. I'll talk about NVIDIA. Or you want to say something?
No. I was just going to say, my concern with all those Rigetti, D-Wave, and quantum computing was as of late 2024. That's when, it was still those prices that I bought it at $5 and all of that. My concern was how fast, it went up. And then, of course, it started crashing after Trump coming in, and then the Iran war made it even worse.
No, I don't think Iran did that. It had to do with the tariffs in China. The Chinese people stopped imports. Trump stopped the exports of chips to China, and all that kind of stuff.
Yeah, but the biggest crash came out after Iran war. That was the biggest fall.
Iran war is a month ago.
Iran war hit the whole market.
A month ago.
It wasn't just NVIDIA. It hit
So
the whole market.
NVIDIA. So again, what I'll say is this, right? That's a growth sector, and NVIDIA has built scale. When you have scale, that's a moat. So unless that sector will crash, if that sector will go away, maybe you are in a black. Look at it this way, right? If you have the best black and white television maker on earth, sell that stock. It's the best stock. They pay good dividends. They have good management, good return of investment, and all that. But they are making black and white televisions. There's no point being in that stock because your stock is perfect, but the sector is shrinking. But with NVIDIA, you have a good CEO with a good stock in a growing market, and NVIDIA has a growing share in that growing market, a trifecta. So if you look at prices are, you're not a scalper. Are you a scalper? I should have asked that question from the very beginning. If you're not a scalper on a short term, why are you even discussing selling it? Again, if you want to make cash, borrow off your NVIDIA, use the money and buy other stuff. But if a stock is growing and the company is growing and the company has a growing share in a growing market, you are hard pressed to convince me why you want to sell it, unless you are a buy and sell trader and all that. Has Warren Buffett sold Apple after he had milked everything he could from Apple? Then he doesn't sell. The guy doesn't sell. Why doesn't he sell? If you sell, you do capital gains and you pay taxes. And then why sell if you don't know where it's going to go tomorrow? If it's not going to fall, why are you saying? It's like saying, let's make it easier for us, sir. I have a house in Lekki. My house is at Lekki Phase 1. Government is building a jetty behind my house. People are coming to Lekki. And I go like, no, rents last year was 10,000. Now it's 9,000. I want to sell my house in Lekki. Nobody will say that was a serious conversation. You want to sell your house in Lekki because rent went from 9,000 to 8,000. No one's going to take you seriously. People are going to say, but you have the house. It's in a good location. Lekki is growing. Nigeria is growing. Why are you selling? It's the same principle, sir. Unless you think that chips and NVIDIA are in a shrinking market, why are you discussing selling? If you're a long-term investor, that is. Hope that makes some sense.
Kalu well said.
Yeah.
Kalu well said. Let me just add this. These days when it comes to these AI stocks and all these tech stocks, sometimes it's hard to really, if you're not a tech person, it's hard to analyze them. It's really hard to analyze them on the deep level. There's a famous guy, Michael Burry. I don't know if you know him, Kalu.
Nope.
He's shorting Nvidia now. He bought $187 million in put options, and he's shorting Nvidia, and he's currently losing money every day. So I don't know, maybe because he's shorting Nvidia, a lot of people, there's a conversation around Nvidia, but and also like the general AI bubble. Because if there's an AI bubble, Nvidia is one of the biggest, in that AI space, at least in the chip space.
So I don't. I don't want to.
For me, it's a solid company long term.
Yeah, no, I don't have problem with Nvidia.
I do think that there will be turbulence. I believe that there will be turbulence in the short term. Do you understand? I believe that there will be turbulence in the short term for Nvidia, but it's a solid company long term.
I don't
know if you guys know TSMC and ASML. TSMC and ASML are actually the guys that make chips and supply the chips to all these guys. So TSMC and ASML are like some of the most solid long-term positions you can take right now in the entire world. I have to just say this is free game. Because all these guys, these companies you hear, all these AI companies, they don't make the chips themselves. Nvidia doesn't make their chips themselves. They buy it from a company in Taiwan. That's why Taiwan is one of the most important countries in this world, because they're the leaders in chip technology. Now, the technology that they use in making the chip is made by a company in Netherlands called ASML. So those two stocks, if you're talking about just buying a stock, just keeping your money there and just waiting for it to grow, giving it 20 years, 15 years, those are some of the best stocks you can buy. I just wanted to put that out there.
Okay. Or most people on this space don't know what ASML is. ASML is the largest company in Netherlands. If you don't know all this stuff, just buy the VTI, buy the VO and go to sleep. That's the point I'm making about funds. You don't know. And you can talk about AI. There's biotech. Biotech, if you want to see growth, go to biotech. You can have a drug today that makes people slim. You are making about 25,000% return. There's biotech. There's defense. UAE is going to rebuild after the war. Who are they going to buy? They're going to buy Caterpillar. They're going to buy investments to build back their towers. They're going to buy a lot of Ukrainian drones. So there's so much opportunity out there, but you don't know. So if you don't know, buy the fund and give your money to the managers that know where the money is going to invest for it. That's the whole idea. You can't know where to invest, but there are people whose job it is to wake up every day, go to that factory and say, oh, you've sold more stocks. Okay, I'll put your ratings up. Oh, you're not selling your stocks. I'll put your ratings down. Remember, Tesla has been shorted more than any stock on earth. Look at Tesla today. So I wouldn't focus too much on what the trading boys are saying. Look at if you like a company, take your time and study it. If you look at, I've said it on Twitter before, in the next 25 years, there will only be 2 car companies on earth that are doing electric. It will be Tesla and a Chinese company. All these other guys are going to fall off. It will be only a Chinese company and Tesla. That's all. Because it's just the scale, what Tesla is building, the scale. You first of all have all the American companies are leaving. Ford has left EVs. GM is leaving EVs. Volkswagen wants to go to China and make cars. Hear me what I'm saying. Volkswagen from Germany wants to go to China to make cars in China, not in Germany. So it's a scale thing.
Because of tariffs, so that's tariffs that made them.
It had not to do with tariffs. It's the cost of production.
China has tariffs, so China has heavy tariffs.
Ben. Let's not have this back and forth. Let's not have back and forth in the space. Let people listen. You can request for the mic. We'll give you the mic to speak. Germany has got high labor costs. They cannot make cars that are cheaper than Tesla if they make them in Germany. Tesla has a car company in Germany. They can't compete with Tesla in Germany. So they have to go to China to make cars in China, import it back to Germany. So Tesla is making its own batteries. He has a mega plant in Arizona. The second one he's doing, he has one in Texas already. So he's going to make his batteries, the car body, all in one. He's in China. He's in Europe. He's in America. He's trying to get into India. So he has built scale to the point that you are going to see a Tesla car maybe $15,000 a year, $15,000 rental. He's not going to sell cars. He's going to rent the cars. How are you going to compete? So if you don't know, follow people that know, like they say, follow who Sabi Road and take your time and research, read the reports and see what's going on. But don't go with what you think is going to happen. If the company has got a moat means you can't replace them, then they are the good stock. It doesn't matter if the company tech is good or bad. We are old enough to know VHS and Betamax, Abi. We all grew up with VHS and Betamax. Who was better? Betamax was better. Who won the war? VHS. Scale. Kenny, what's up?
Yeah, just to support your idea that you said when you were making your submissions about the news and following the news and everything, it comes back to this NVIDIA stuff on what inspired me with NVIDIA. It was about when, and I'm not shaking on NVIDIA at all. It was when Biden put in more money. You know, if you remember when the CHIP Act was signed, the $52 billion. That's when I spotted NVIDIA, and I have stuck to NVIDIA since that time. But it's just to emphasize on, following the news and, understanding the news that can lead you to to buy at that, at that time.
Yeah, exactly. Like if you look at that, everybody says Dangote. What is going to make money in Dangote? You got to know what part of Dangote is going to make money. It's not everything that will make money. Fertilizer is going to make money. Petrochemical is going to make money. Aviation fuel is going to make money in Dangote. Again, you have to know what it is. If you don't know, buy a fund. If you don't know, buy the fund. If you know, buy the individual stock. That's basically it. Guys, it's been a nice 2 hours here spent investing. Let's see if anyone has a question. We'll spend up nearly 2 hours here. So we'll round up by the top of the hour. Twitter, go ahead. Mohammed, hi, how you doing, Mohammed?
Hi, good evening, Kalu. Good evening, everyone.
Welcome back. So we're back to your Sunday. I know you missed us.
Thank you. I'm glad to be here tonight again. Thank you, everyone. Nice to meet you again. Happy Sunday to everyone. So quickly, I have from our last space, there is something I want to understand. Because for me, I'm still learning about this stock stuff. I will not lie, even though I'm a businessman, but I'm actually just taking my interest in stock. And I've seen this is the main way to go to grow what's it called, empire in your other hustling way or something like that. Because we are on the way to make sure maybe someday our own company too can be listed on the stock. So, but then there's something I want to understand. Can you buy like a compound, like a capital? Can you use a capital to buy like a compound of a stock?
I don't understand.
What I mean, like for example, now like 1 million. Can you use 1 million to buy like a 2-3 stock? Is it?
Yeah, it depends. It depends on the par value of the stock. For instance, Bamboo, you can open an account with $1 or $2, right? But how much is the stock? If a stock is 10,000 naira, then you can't buy it with $1,000, but you can buy the fund. So it's like saying you want to go and buy meat with 10 naira, So what is the cost per? Then you buy according to that. It's cheaper to buy the fund. That's what we're saying fund, because Nigerians are not investing. Nigerians are saying they don't have money to invest. So we're saying it's cheaper for you to buy the fund than to go buy the individual stocks, especially in a country where we don't have a lot of investors and disposable income. That's the whole idea I'm making. Yeah.
Okay, so like now 1 million can only go for just one stock. Like maybe
No. Go. You have to do more research, Mohammed. I want you to do some research. Go online. Just pull up the daily market list. Go to your newspaper. Just go online and do daily market list of Nigerian stocks. You see the stocks. you see the prices. You see Zenith Bank, maybe it's 100 naira. That's how much you used to buy one share. So if a stock's 100 naira and you have 1 million, divide 1 million by 100. Let's just say plus fees. That's what you can buy. But the fund will buy all those shares. Then you buy the fund. So instead of you buying the individual stocks, okay, listen to me again. You are going to buy, you can buy individually or you can buy the fund. Individually, you're going to buy one by one individually, or you can buy a fund that has bought everything. It's like me. Look at it. Better example would be Dangote. Let's say Dangote had Dangote Group. There's Dangote Group, there's Dangote Petrochemical, there's Dangote Tomato, Dangote Rice, Dangote Salt. I can go and buy Dangote Sugar, Dangote Refinery, Dangote this, Dangote that, or I can buy the group. But do more research, Mohammed. You're asking very, very basic. I want you to Mohammed. Okay, Mohammed, do more research. Go on YouTube and say, teach me about stocks. I want you to learn about stocks at a very, very basic level, right? Yeah, because you need to understand. Go on YouTube and just say, explain stock to me as a beginner. It will help you a lot. I want you to do that, right? Understand what it is at a very, very basic level. Yeah.
For the guidance.
Correct. Yeah.
That's all thank you so much.
Fantastic. Appreciate you, sir. All right, Kelechi, what's up, man? I've got Kelechi and I've got Emmanuel. Kelechi, what's up?
Yeah, good evening, Mr. Kalu. Thank you very much for what you do.
Thank you.
So my question is it advisable to sell a portion of your stock? Say you traded the news, for example, the current Iran.
You want to?
Can you hear me?
Yes, I can hear you. Yeah, I can hear you.
Okay. So I say thank you for all you do.
Thank you, Kelechi.
So my question is it advisable to sell a portion of your stock or a portion of your gain rather when it's expected that the stock price will go down? Say, for example, you traded the news and taking Iran US war into context. So we know that the price for oil goes up and then it affects the stock price. And so because you know that the price of the oil will go up and then you take a position. And then it's also expected that when the war ends, the price of oil will go down, which will also affect the stock price. So is it advisable to take profits in this kind of scenario?
Yeah, it depends. It depends on the kind of investor that you are. If you're a trader, obviously, yes, you say, okay, I want to trade, I want to make 30%, it gets to 35%, you can sell because you're a trader. But what if you're a long-term investor? Maybe you're this 30-year-old guy that wants to buy and hold. Why would he sell his shares? Because will he not make profit in next year? Why would he sell? He might say, okay, I'm going to get my dividends, I'm going to reinvest my dividends and even grow my ownership of Dangote Refinery. So the answer, it depends on why you are investing. Let's say you took your rent money and you got lucky and you invested in that share and the share price went up. Of course, you sell and take the money and pay back your rent. But if you're a long-term investor and this space has a bias towards long-term investors, then why would you sell if it's a good stock?
No, my question is if you traded the news, like the Iran US war,
yeah,
we know that the oil price will go up because of the war, and then what's happening now, it has affected the share price.
Yeah.
So say, for example, you took a position, with ExxonMobil, and then you know that, after the war, when the war ends,
I understand your question. I got your question. It's a great question. I'm saying that the answer depends on the kind of investor that you are. If you bought those shares because you wanted to trade, yes, you should sell them and take the profit and go away. But if you are buying those shares because you want to build a portfolio that maybe will pay you dividends in 25 years, 30 years, when you have retired, then you should not sell them. So it depends on your goal. What was the reason why you invested? There is no bad reason. You can say I invested for trading or I invested to build a portfolio. Whichever it is, that's why you invested. That's going to be your answer.
Okay. Thank you.
Makes sense? Thank you. Yeah, go ahead.
Hello, good evening, sir.
Yeah, hello.
Hello, good evening, sir. Can you hear me, sir?
I can hear you.
Sir, I watched one of your YouTube video on the VT. I wanted to ask if I put my 300,000 in it and I didn't add any other money in it, and I'm holding it for 30 years, do you think how is it going to react?
I don't know. I
don't really get.
I can't predict the future. I don't know. What I can tell you is this, right? In the past, if you had invested the funds in the VTI, which is you got exposure to the US stock market in the past, the US stock market, if you compare it with every other asset class on earth, has been the best performer. So if you compare with Japanese equities, Japanese property, Nigerian equities, your UK bonds, wherever you compare it with, exposure to the United States stock market, the largest, most liquid market in the world, has produced gains that have beaten US dollar inflation and have even beaten other economies. That's all I can tell you, but I can't tell you what's going to happen in the future. Make sense for you, sir? All right, I think it's dropped off. Jeez, I lost this lady.
Sorry, Kyle, cool question. What's the VIX? Is it the VIX you're talking about? I don't. What's the VIX? Sorry, clarify.
VTI. VTI is a Vanguard
VTI.
ETF.
Okay.
Yes, Vanguard ETF, not the VIX is just your risk measure. Vanguard ETI. Thank you. So I think Curtis is gone. Let's get James in here. James, last lady I was going to pick. Manu, I think I've answered your question. Thank you so much. Kelechi, thanks so much. Yeah, perfect. Someone is asking me on YouTube that I want to participate in a Dangote refinery IPO. One needs an account with a SEC-registered stockbroker. Can this be done online, for example, with Stanbic IBTC? So you're mixing lots of things there. Dangote is going to be an initial public offer, IPO, initial public offer. So they're going to sell it's going to be the same way MTN sold their shares. They are going to appoint authorized sellers. It will be your banks and your stockbrokers. So when you go to those banks and the stockbrokers, you will fill out a form, because an IPO. You fill out a form and say you want to buy Dangote shares. They will give you the minimum you have to pay. You feel exactly how much you want to buy. You submit that form. The way they're going to do it, I believe, is that when you submit that form, it will create a CSCS for you. If you don't have a CSCS, they will create one for you. If you have a CSCS, you might put your number down, and those shares, when allocated, will go to your CSCS. So that's what's going to happen. It's an IPO. You can't buy them from the market. You have to, first of all, buy it in the public offer first. It's after the public offer from Dangote that you can then go to the stock market if you see it, and then you can buy. So that answered your question, right? Does Bamboo do money market? Yes, Bamboo does money market. Get the ticker for the money market app, go to Bamboo, and then you can do the Bamboo app. For an aggressive or conservative approach, do I have to register an open account with all the companies? Who manages this plan? Or is there one app I can do it all? Yes, Olu. What we're saying is that if you want to do this exact thing you're seeing on the portfolio here, i.e. the ETF and all that, the NGX30, or just buying the whole market, you can buy it through the app, get the ticker, do on the search bar, and you can buy. Make sure you do your research and know exactly what you are buying. You can duplicate it, or you can create. You just ask Google, give me an ETF mutual fund that replicates this or pays me dividends. Whatever you ask, it'll give you the answer. Get the ticker, then go back to the app, and then you can buy. That's basically how you want to do it, right? James, go ahead, James. James, you got the floor.
Yeah, okay. Greetings, everyone. And special greetings, Mr. Kalu. Thank you so much for what you do.
Thank you.
Actually, we all appreciate this. Okay, my question is, how can one really maintain the discipline to be a long-term value investor while you still capture some short-term spikes? For instance, let's say you are investing, you're not a day trader, and you have a stock, and then one particular stock in your portfolio spikes like 15% a day, you know, in just one day, you see the thing spike 15%. And you look at it, and you see that there was not even any major fundamentals or company-specific announcements or anything that underpins that spike. You know, it's just market just tending towards that, or market reacting to another related stock or certain news. Not that the company itself has done anything spectacular. And then you look at the spike again and you see that maybe the momentum is beginning to drop, that this 15% may eventually collapse to just the net of 5%. And you are tempted to capture that value momentarily and maybe you re-enter again. Now the question is, where do you draw the line? You know, should a value investor be doing this kind of thing? You know, capture those momentary value and come back, which obviously is trading. When you know you're not a trader, you may not have time for trading. Or do you just leave it and ignore it like this is just market? But you know that when that thing eventually drops, just the emotional torment on you alone that you put yourself into, like, this thing was big, you know. So the question I have is, where do you draw the line, or what can one do in this kind of situations?
Yeah, so I mean, you're making a lot of assumptions. Number one, you are saying the stock price will fall, then rise. You don't know that. That's number one. Number two, if it's a real value stock, will it be going up and down if there's no news? Like we all know, share prices have fallen in Nigeria, right? But we know because maybe of Iran war, of an event, a black swan. If there was no black swan, no Iran war, will a value stock, will Dangote cement just fall by 20%? It was no external issue. Did it just happen? I doubt it. But you can find small cap, maybe insurance stocks, small cap insurance stocks will just go down by 20% because one big trader offloaded a large number of shares. So you have to classify your strategy and the stock before you get in. Some stocks, if they are large cap, they're not going to do what you're saying. So you saying you bought it, it went down, you want to capture, you are simply trading. You're not doing value investing. The same example, the Lekki. So if you own a home in Lekki and the street floods, will you sell your house in Lekki if the street floods?
No, I'm even talking about the thing spiking, for instance.
Yeah, but I'm asking you the same question. I'm asking you, if you own a house in Lekki and your house is flooded during rainy season, will you sell the house in Lekki?
No, not a good time.
Why won't you sell it? The street is flooded. Why won't you sell it?
I mean, it depends, but for me, I wouldn't, because
why?
Is that
I'm asking why.
Everyone will underprice it. It's not a good time.
Exactly. So that's it's the same principle with stocks. If you sell because the price is going down, it's already been on the price. So you are selling, you are actualizing a lower price, not value. The value doesn't change, the price changes. So if there are more people selling and you react to that, Mr. Market is saying, I want to buy your stock at a lower price. And you say, okay, Mr. Market, take my stock. What have you done? You've actualized the loss. But if you ignore Mr. Market, if your objective is, I want to invest for 10 years, then what is the price movement in a month to you in 10 years?
Okay. Let me use a specific concept. Maybe that will help. For instance, on Friday, AMD went up.
What's AMD?
Almost, that's advanced micro devices.
Okay.
Yeah, it went up. It took almost 18%. And then there was nothing specific in AMD that caused that.
There has to be something specific that caused it.
Exactly my point.
No, there has to be something specific. It just can't wake up and fall. Abi?
No, it wasn't even falling.
Sometimes maybe a big buyer, maybe a hedge fund just made a big position. Sometimes it's just that.
Okay. Oh, I see. Thanks for that. So, because there wasn't like AMD had announced they've acquired this or they've invented this, their processor is 10 times faster. Nothing new specifically. And it took almost that 20% increase. So my point is that normally I would expect that this thing may normalize to about 10%. let's say that price was from maybe 300 or 320, went all the way to 350. My mind is telling me that the thing may normalize back to 320.
Okay,
or
so did AMD go up or down?
It went up, massively up.
Do you know why it went up?
So
do you know why it went up?
I haven't found out, but
that's the whole thing. So you have to find out. It went up because the French government was taking a stake.
Oh, I see.
I knew it. It's always a big buyer. I'm just know that somebody took a big buying position for that thing to just go up like that.
So again, but it goes back to the point I'm making, so that a stock just can't wake up and say I'm going to go up by 20%. It doesn't happen. So you are basing your analysis on things you believe. Oh, the stock just went down 20%, or the stock just went up 20%. No, it's a human that is buying and selling. So if the market says it's going to go up, someone has heard that the French government was going to come in and invest. So the share price went by 72%, not 30, 72% in the last 30 days. The stock is up 72%. Because the French government...
Won't it eventually even out? Won't it eventually even out to something less than where it is today?
But we don't know that. So again, the question... So if we knew that, we will be Warren Buffett. What is happening is that the market is saying this company is going to get fresh capital from the French government. The French government wants to do small nyash to shake because America is doing AI. So they also want to do AI. So they've gone to AMD to say, wow, we're going to invest in AMD because America's also investing in NVIDIA. That's what is happening. Do you know when they'll stop investing? We don't know.
Very funny move.
We don't know. So because we don't know, it's gone up by 72% in 30 days. The French government can wake up tomorrow and say, we're not interested again. It will crash back again. Remember, the share price is the discounted present value of future earnings. So what the market is telling you is that because there's investment by the French government, that the future earnings is going to go up. The market can be wrong. The market, what I mean wrong, the market, AMD can have this money and go and invest in South Africa, and they will drive all the black people away, and nobody invests in South Africa again. Then they will lose money. So this bet will now crash. So all the share price is telling you today is that at $347 per share, if you discount the future earnings of AMD back to today, you get 347. That's what it's telling you. Based on that, they would invest its investments and make money. What if they don't invest it? What if there's under war? What if there's COVID? So if you think the company is a good company, you stay. If you think that the company can invest its money appropriately, you stay. Well, let's look at PayPal. A few years' time in Nigeria, all Nigerians were saying PayPal is bad. Let's look at PayPal. Let's look at PayPal holdings. Nigerians didn't like PayPal. Our friend invested in PayPal. They said, why are you investing in PayPal? Because it drove all the Nigerians away. Let's look at PayPal. PayPal is up slightly, 1.17, slightly up, no doom and gloom. Lots of people sold. It looks up. Let's do year to date for PayPal. I'll just make a point on you. Year to date is down about 50. It's down 13%. But this stock, lots of Nigerians don't like this stock. They came, they did this, now they're coming back with another Nigerian inventor, right? Do you think PayPal is going to make money in the next 1 year or not? That's the question. It's always a binary choice. You don't have to go in and say PE is this. Do you think this company is going to make future earnings higher than today? If the answer is yes, you buy. If the answer is no, you don't buy. End of story. If you overanalyze it, you get stuck in the mud. But ask yourself, will they make more money? Will people still use PayPal to pay?
You're not making anything. It's down. It's going down.
If it's going down, you don't buy. End of story. You don't buy. If you think you're going to make money, it's now trading at a flat rate, you buy. End of story. Remember, many companies have been written off and they've come back. Apple is back. Many companies written off, they are back.
Kalu, do you believe in PayPal?
I won't answer that question online because people take it as spot. I mean, I would, if you have to ask yourself, what is this? What does PayPal have? If you say PayPal, people know what PayPal is, and they are pushing in America. This you can pay on the, you can pay without using cash, pay less. They are pushing it. They have a new CEO. So all these things you have to say, will it affect the, they have a new partnership with the NFL. They have a new partnership with the US Treasury. They are accepting Venmo for debt donations. All these are simple things that are going to push that stock up. So if you want to do NFL, you are using PayPal. If you want to buy US Treasury or Venmo, you are using PayPal. If you want to donate debt, you are using PayPal. These are small things that can just change the equation a bit for them. Once they get their groove back, people are going to be like, wow, it was 50, I didn't buy. It's always like that. It's always had I known. Always had I known. Intel, I tweeted about Intel a long time ago. Intel. Let's look at Intel. Intel, dead company, couldn't compete in the market. Like US government had to come and save them. Let's look at Intel. What's Intel doing right now? One day is done. Let's look at year to date for Intel and see what's happening with that stock. It's up about 15%, I believe. Up about 15%. This was a dead company, right? The dead company that the US had to come and save. Abi? So this, especially these AI companies, they are very, very volatile. They can crash and they can go up. Look at Meta. Well, Meta was riding high. Now they are suing Meta, right? Let's look at Meta. They are suing Meta that kids in the US are addicted to Meta, and it's detrimental to the health of US kids, and that Meta did not do anything to stop it. So who do you think has a worse storyline, PayPal or Meta? They are suing you that children, not that the lawsuit that they lost, saying that they can now be sued. They haven't started suing them. They just said you can now be sued, which means that lots of parents are going to come and say, well, we don't, Meta has put our kids, they have to pay damages. Should you buy Meta? Should you hold Meta? Ben, your hand is up again. What's happening?
Yeah, very, very quickly. Let me just, I like the examples you gave. Meta is in trouble right now. Let me just say something about the point that the last speaker raised. You know, I understand.
All right, guys. I'm not hearing you, Ben, if you're speaking. I'm just not hearing you. But I think it's been Ben, I'll give you a few minutes and we'll wrap it up. Should I keep money for Dangote? Oh, go ahead. Ben, why hearing you? If you are speaking, why hearing you cut off? So you want to... Okay, Ben, I'm going to mute you, Ben. I'm just going to mute you.
You don't want to, but the one is very low. So you put most of your capital there, probably maybe 60% of capital or 70% of capital, depending on how you want to look at it. You put most of your capital there, and your mandate for that portfolio is...
Okay, Ben, let me mute you. You're breaking, so I'm just going to mute you just because you're breaking. Guys, what a call today. I think we've had a very, very fruitful 2 hours. Let's not keep it too... We had a fruitful 2 hours. You guys, we've talked you through what we call goal-based investing. The point of this space was to show you that there is no good or bad investing strategy, but you have to invest with your goal in mind. If you have a long-term goal, invest with asset classes, with a partner, with that in mind, so that you are investing to meet that objective. That's the whole idea of the space. Invest according to your goal in mind. Use mutual funds. Don't wait till you have money before you invest, because time is dangerous. If you don't invest, you lose the opportunity, and the power of compounding becomes negative for you. So as soon as you can, start to invest. If you then become richer, you have more liquidity, you can buy individual stocks. But at this very moment, if you can't buy that, try to do a lot of, should we say, ETFs and all that. Based on your age, you should determine how aggressive you should be. Aggressive means how much equities are in your portfolio. When we say you are aggressive, it means you are doing more equities, right? So based on your objective, based on your risk profile, based on your age, you can say I want to be more aggressive or less aggressive, but it's always to meet your financial goal. We've given you a lot of sample portfolios you can use. We've asked you to consider using many of these apps, including Bamboo. They are SEC registered. It's cheaper for you. It's online. If you're in the diaspora, it's a very, very quick and easy way for you to get exposure to Nigerian stocks, Nigerian bonds, money markets, even dollar investing. So if you're abroad, you can park your dollars on the Bamboo app in dollars, get 2.5 higher than what you get in your savings account in America, things like that. So take advantage of this stuff and grow your portfolio and become a better investor. Fantastic, guys. I've got a call today. Thank you all for hanging out with me this Sunday. I appreciate it. I will be back here next week. That's what we do every week. We're talking money, the economy, and finance, right? We've also asked for your support. Like, subscribe, share the page, get the book, send to a friend, and just be in that know of money. Personal finance is not something you just do once in a while. You do it constantly, and you do it with purpose. You've got to be intentional about where you want to invest and how you want to build out that budgeting and that journey to get financial freedom. The end point, guys, remember, the end point is to build a stream of passive income. Once you build that stream of passive income, you have arrived at your permanent site. Thank you so much, guys. I'm going to let you guys go, and I'll see you guys back here next week when you guys will be here. I do appreciate you guys hanging out with me. I'll see you guys. Take care and bye. My name is Kalu, just in case.
to prove them wrong.
Love brought Jessica Williams thousands of miles from Delhi, India, to Asaba, South Nigeria, where she now calls home.
When my husband told me that he wants to come back to Nigeria, I was a bit nervous because what we
ברור, יש סימנים לכך שהמצור מתחיל לתת את אותותיו על הכלכלה האיראנית ועל המשטר. בראש ובראשונה, זינוק חד מאוד במחירי המזון. על פי חלק מהדיווחים, מחיר הבשר באיראן עלה ב-700% בימים האחרונים. דיווחים אחרים מדברים על עלייה מתונה יותר, אבל עדיין חריפה מאוד, של כ-100% ברוב מוצרי המזון בחלק מהאזורים באיראן. זה קורה על רקע קריסה מוחלטת של המטבע האיראני, הריאל. דולר אחד היום שווה יותר מ-1.3 מיליון ריאל. למעשה המטבע של הרפובליקה האסלאמית הוא היום נייר חסר ערך. בנוסף לזה, כפי שמיד נראה בכתבה של דרור, קריאה של נשיא איראן, מסעוד פזשקיאן, לאזרחי איראן, לצמצם את צריכת החשמל הביתית על רקע המצור הימי, אנחנו רואים עוד סימן מעניין. במהלך סוף השבוע משמרות המהפכה מחזירים לפרישה לגמלאות מכלית נפט שהיא למעשה גרוטאה צפה, הנש.
Sanchez goes long, goes very long, and João Pedro gets underneath it and knocks it back to Fernandez. It's there to be hit by Pascal Stroud. Seen a fair bit of coming and going. He's France Leeds player. Here's cooking anyway. Up again by Enzo Fernandez. Seen plenty of the ball early on, which is a good sign for Chelsea. Caicedo and Kalu Aja to the lowest of blocks.
Just being
push out now.
They're being dominated, aren't they? Really are being dominated by a very good Chelsea start. With the ball and without the ball. Better with the ball. Decision making. One really good save there.
I just wonder whether Callum McFarlane has simplified his game a little bit. But here's Malo Gusto on the charge.
Dangerous on the break.
It's a bit of a tough call for the Chelsea players. If they play really well, and every sign is that they're going to do that, they say, well, what have you been doing the last couple of months? Here's Pedro Neto. It's worth a watch. It's available on the
the internet. You wouldn't have wanted to watch slow motion replays of some of those tackles, would you? That'd be a horror show.
One of the Eddie Gray was so good that he was singled out. Really, it's the one they had to stop by any means. They're all foul, mostly foul. That'd be it. And that there's Pedro hits the post and across the face of the goal. Longer when it's rolled to him than taking it himself. Chelsea carry on from the keeper's clearance. Enzo Fernandez. Garnacho.
What's in the boot? Take it. Let's open the boot. Open it. You want to fucking die? No. What do you have in your pockets? Say, if I have, I give you. I have. Say, my brother, if I have, let me see. Take everything. Salam. You Muslim? Yeah. Say your mom. Salam. No stress, my guy.